go in 5, 4, 3, 2. Welcome to Monday Morning's Cultivated Live. My name is Jay Rosenthal. That is Terry Mendez. He is the CEO of Safe Harbor Financial. Terry, thanks for being here.
Thank you for having me, Jay.
Well, I'm glad we could. And even before we went live, we talked hockey, baseball, and then, well, maybe in this order, and then cannabis too. Before we get into Safe Harbor, you have a deep, long, broad, and diversified background in cannabis. Give us a little bit of background about you, and then we'll get into Safe Harbor.
Sure. I told my team recently, I've only been the CEO for, I think this is week 6. I told my team I'm a Generation X Puerto Rican, a New Yorker, but not a banker. And that's very important because I think I'm one of the few in the industry in the financial services banking space that have been an operator that's run dispensaries, cultivations, kitchens, etc. So sets me apart a little bit. I spent the first 14 years in professional services in companies like Arthur Andersen and Deloitte, then hit up the Global 1000 with companies like Arrow Electronics and Hitachi. Then went on to run a single state operator, a multi-state operator, and help companies like Advanced Nutrients and others with strategy. So that's how I got into Safe Harbor. I sat down next to Sunday at a cannabis event. We got into talking. She asked if I could help her develop next generation strategy. When I delivered that to her, she allowed me to present the strategy to the board. The board turned to me and said, well, can you do it? And we talked about, let's go do it. And she was going to be the co-CEO. She chose to retire. And before I knew it, I was the CEO of Safe Harbor.
So you're I want to say this nice way. You were a suit, then you're a cannabis person. Now you're a cannabis person in a suit wearing a tie, but it's a weed tie.
There you go. You got to compromise somewhere. I love it.
You do. You get to wear a hat and a tie, but it's all related to cannabis, which is kind of what I like too. And give us a little bit of I don't know if it's a state of the industry, but not a day or maybe a week goes by we don't talk about cannabis and cannabis banking and what reforms might be on the horizon. Mm-hmm. What is the state of play right now for, the people you used to work for, with, or companies you lead, like a single state operator, multi-state operator, a single kitchen making gummies in some capacity? Like, what is banking like for all of those people, or is it the same?
Largely the same, because the infrastructure is largely the same. I think Safe Harbor is a little different than most because our customers are the financial institutions, the credit unions that are out there. They're protected by a 2014 FinCEN kind of carve out. And the cannabis related businesses. So when I presented to the board, it was all about how can I help the success of our cannabis related businesses, not only through providing bank financial services, but expanding beyond that. We have a $25 billion platform. That's $25 billion that have gone through this platform. We know a lot about our customers. We know who pays them. We know their vendors. We know their people. Knowing that level is beneficial for us to then leverage that to drive lower cost of production. And I'm bringing in people that are cannabis people. So I'm bringing in people that could actually help folks be successful. I want our cannabis client to come to us and say, this is what's going on in my business. What do you think? That's unexpected in the banking space. Otherwise, you're talking about more of the same. The other thing we do very different is many folks just have a technology play. They provide the technology to have a compliant banking platform. We do it all. We provide the technology, we provide the people, and we provide the access to cannabis related businesses. And so if you're a financial institution, you really don't need, we want to teach you, but you don't need to be an expert in cannabis to say yes to cannabis. And that's what I really loved about this opportunity.
And since you've been in the industry, like, this part of the industry has grown tremendously, but not, I guess it's been exponentially, but it's not every bank, not every credit union, not every credit facility, not everybody's involved in cannabis yet. Mm-hmm. And there is some reforms being talked about in DC. I saw you posted on LinkedIn about rescheduling and what that might mean for cannabis, mm-hmm. banking and finance. Like, talk a little bit about some of the reforms that people have been talking about and what you expect to happen, say if rescheduling happens, or you were talking specifically about the States Act.
Yeah, so I don't believe, I have less optimism around safer banking or safest banking happening. If it was going to happen, it should have happened over the last 4 years. The States Act is interesting in that it provides more ability for cannabis operators to act as if normal companies. It doesn't solve 280E. The only thing that really solves 280E is rescheduling. But I have been talking to some of our clients that have explored other models like 471C for smaller cannabis companies that want to put more in cost of goods sold and mitigate some of the 280E taint, or things like an ESOP, which I find to be a very interesting opportunity for some to avoid 280E altogether. But even as an acquisition model, the ESOP model allows people to pick up assets that that are 280E tainted and they haven't paid their taxes, right? So the government has been a lender to the industry. And if you're trying to acquire a company that has a high tax liability, that's a risk. And so that ESOP model is actually interesting because you can get a deal done absent having to deal with that tax risk.
And what do you? So that's on the sort of the state of play for cannabis businesses right now, and what is happening on the banking and finance side. But talk about the industry overall, because you've been in it for so long. Like, where are we in this? We were talking sports before. Like, is it appropriate to say we are in inning X of a cannabis industry that may be going 9 innings, or is it like up and down, and it really depends which market you're in about sort of where you are in the maturity of the industry? Or are we seeing some sort of steady state in some markets and some others? Like, where do you think we are vis-a-vis the industry sort of in the States?
So you got to remember that this industry is still in the early stages. We want to talk baseball, we're in the first inning. And the reason I say that is that I've been part of huge global organizations. Hitachi, $100 billion company. Arrow, $25 billion company. The largest of cannabis companies out there would be an immaterial entity within some of these, call them Fortune 100 entities. And so as we think about the industry, there's so much run room. We're growing at an 11 point something percent CAGR, compounded annual growth rate. So we ended last year around $34 billion US industry. We're supposed to be at $75 billion at 2030. International markets are exploding. And so while I see these activities happening, you wonder which one of our clients are going to be successful and which ones are going to have challenges. The challenge is that the revenue numbers are exciting. The margin numbers are flat. And so when you see margins of 10 and 15%, you say, is there something left over for the investor in a high risk area? I see the industry as experiencing a perfect storm. We have high interest rates, high inflation, illicit alternative drugs that are available to people. You have a administration that I'm optimistic will address some of those things, and anything that addresses those things will improve the outcomes for our clients. However, in some of our states, you're seeing single state operators that have one thing they do. If you're an extraction facility, you're getting pressed by your vendor, which is a cultivation, and you're being pressed by the dispensary partners, which are looking to extract as much value out of their dispensary investment as humanly possible. So being single state operator, I just talked about this yesterday, is a difficult thing. And the only way to do it is to really manage that business lean and mean. Gone are the days of kind of lack of judicial use of capital. Capital is so hard to come by. And if you have some capital, how you deploy it and how quickly you get it is going to be key. For example, I just worked with a company that said, hey, we made a large purchase of packaging materials and vape pen materials to capture volume rebate discounts during the Chinese New Year. The problem with that is as sales started tanking, they were looking at that inventory that you should have taken 6 months to turn over. Now it's taking maybe 18 months to turn over, and your cash conversion cycle now becomes wider and wider. And so we have to be very careful given the access to capital constraints in the industry. And we're going to see that fix. And as that fix, people will survive. And I think the healthier companies out there that have margins in today's existing environment, regulatory environment, will continue forward. The ones that are having challenges, I just ask them to call. talk to me, talk to your consultants. The hardest thing for me to deal with every day is when I hear the story of the company that's just too far to safe, right? And so and the answer, I mean, while I try to help everybody, the answer in my head is, I wish you called me 6 months ago. I wish you called me a year ago. And while it might be more money to hire an expert, it's much more expensive to just kind of swing and whiff.
Yeah, and you are from New York. You live in Colorado, but have had this broad experience and depth of experience. Do you see in newer markets people learning those lessons earlier and earlier, or like taking those lessons into account as they open up? Right, they're not making massive capital expenses up front, but actually building small and scaling from there. Or do people keep running the same playbook poorly, market after market, or is it a mix of both those things?
I think it's a combination of both. I think there's a combination of education that needs to get out there. Look, I'm all for diversity, and I think cannabis industry is the most diverse on the planet. We accept everybody and anyone who knows how to grow, extract, or sell. Phenomenal thing. Social equity licenses, phenomenal thing, but folks don't have, look, I graduated from Wharton. I spent 15 years in professional services. Not everybody has that type of background, right? And so as you are taking risks with your money, with your finances, with other people's money, the opportunity to find a mentor in each area. And the hardest piece is vertical integration. Vertical integration requires you to be an expert in running a kitchen, running a cultivation, running an extraction facility, expert in dispensary management, promotions, and marketing. By the way, you need to have be an expert in HR, finance and accounting, taxation,
compliance,
etc. Compliance, the whole nine, right? It's very difficult. And while some people have figured this out, others are still struggling to figure out how to compete in that world. And that's one of the things at Safe Harbor I proposed to the board. I proposed us investing in, and we are investing in, low-cost centers of excellence where people that are single state operators, single dispensary operators, single facility operators can leverage our platform to actually have them focus on delivering the cannabis they want to deliver in whatever form necessary, and take away those things that you're not expert at. Nobody likes sitting there at night, 10, 11, 12 o'clock playing on QuickBooks, I promise you.
Even accountants, I don't think.
Nobody.
It's tough, right? Like, it's all those things wrapped up into an industry where it's hyper competitive and fickle consumers, and as you mentioned, sort of operators outside of the sort of regulated space. But do you see, I mean, I want to look ahead as sort of we wrap this up, like look ahead, do you see a state, not a state like physical state, but a state of the industry where some of these things normalize? You said you're optimistic, like one or two of these dominoes fall and we see really rapid growth in many markets. Like, do you see that happening in a 1, 5, 10-year horizon, or is it like just a big question mark about what that horizon looks like?
I think you're talking about 3 to 5 years out. I think we have to overcome, we have one or two things have to happen. People have invested millions and millions of dollars in expanding their grow capacity in that 2020 timeframe that came in line 2021, online 2021, 2022. And now we're seeing the reverse, those people shutting that down and the turnover in inventory slowing. As we strengthen each state's ability to battle illicit alternatives, as we strengthen each state's ability to provide consistency in what to expect, we will see that start turning around. People will figure this out. I see people going towards not only automation in the manufacturing process, but automation in every process. Again, I come from a large IT background, both of those companies before large IT companies. There's no reason why you can't automate nearly everything that you don't want to do yourself, right? And you've seen the automation happen in Canada on the manufacturing side, somewhat in the US. You haven't seen it to the level, and you haven't seen it broadly across all the different functions within a company. I think we also have to learn how to trust each other, right? We're in an industry that, because of the lack of trust, we have a challenge working together to solve common problems. And if we were consistent in our ability to work together, we would have a much broader industry alliance, I believe. But 3 to 5 years, this is going to iron itself out. You're going to see consolidations continue to happen. You're going to see some winners and losers on the single state side. You're going to see the brands that are trusted. And then you're going to see people figure out the right mix between low end and high end products.
Well, that's it's a lot. We've packed a lot into a 15-minute conversation, Terry. I hope we can have you back at some point. Maybe we'll talk midway through the hockey playoffs. So over the next couple months, we'll connect with you again. Congratulations on the new role into week 7 as the CEO of Safe Harbor Financial. We'll connect with you soon, and thanks for making time today.
Thank you. Take care.